So for the foreseeable future, meaning 2025, you're going to have less competition. A lot of stuff that you buy and you invest in is entry level housing. And it was already remarkably hard for first time home buyers.
Mhm.
It's only getting harder because now there's the economy and layoffs and tariffs and inflation and stagflation and stock market collapse and yada, 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 yada. So entry level homes aren't going to be bought by first time home buyers. They're freaking scared.
All right. What is happening, everybody? One rental at a time, family. Check it out. I am going to be asking Michael Zuber a few questions, and I think that everyone needs to pay attention. He's been doing this for a while, 20 plus years, 25 years, something
Yeah.
like that. He has a
Yep.
few years on me. And I want to hear, especially with what's going on with Trump, what's going on with the economy, what the end result is going to look like. We just got 0.75, percentage rate that decreased last week, and it's not done yet. We have
Mm.
6 more coming this year, so let's get ready to take that inventory
Mm.
and obviously push some more houses out there and
Yeah.
refinance what's coming too. So, tell me what your thoughts are for 2025, the rest of it, and first quarter, second quarter of 2026.
So I think, 2025 is going to be the year of the real estate investor. I still think it's going to be hard for a lot of people. We did see interest rates drop last week significantly. They're up a little bit today.
Mhm.
Um, but that said, I think you're right. I think the trend is lower. The question is how soon, how fast, how much. But if we step back and just look at 2025, it's going to be the last hard year, at least for transactions, right? We've talked about this before.
You're right.
But as a real estate investor, it's kind of counter cyclical. What do I mean by that? If you're a real estate investor, Omar, which you are, you're likely one of, if not the biggest fish in your market in the Inland Empire or high desert. And I ask you one simple question, Omar, do you want more or less competition?
I want less.
And you would probably like a lot less competition, right? That's less
100%.
competition, good for you.
Yes.
So for the foreseeable future, meaning 2025, you're going to have less competition. A lot of stuff that you buy and you invest in is entry level housing. And it was already remarkably hard for first time home buyers.
Mhm.
It's only getting harder because now there's the economy and layoffs and tariffs and inflation and stagflation and stock market collapse and yada, 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 yada. So entry level homes aren't going to be bought by first time home buyers. They're freaking scared. And we have record low affordability and. So your competition is going way down. Now, over time, what you're likely going to see is inventory build. It'll be interesting to hear from you because you're in the news or you're in the market. Last week might have been interesting because given the rate drop, you might have seen some people come off the sidelines and take some stuff pending.
Yeah.
But I suspect over the next weeks or months, you're going to see supply build more because demand falls, hence
Right.
supply build. So again, as a real estate investor, Omar, do you want more or less supply?
As a investor, I kind of
Yes.
want, I mean, depending. I want more supply so we can get cheaper properties. I want less supply so our properties that we did purchase have an increase.
Well, the good news is you're going to get more supply, which means you
Yeah.
just have to buy better because your hold times are going to go longer, right? We've talked
Right.
about that.
Yeah,
So
we
I
have.
think supply is going to go up. And then here's the coup de grace for real estate investors and why 2025 is going to be great. Do you want more or less motivated sellers?
I want more.
You're going to get them. You're going to get more people afraid, scared, concerned, and for the foreseeable future, say 3 to 6 months, motivated sellers are going to go up. It would not shock me if you're getting more inbound traffic, you're getting calls off billboards, off ads. People are scared. And for a lot of people, their only liquidity or their only equity is in their house.
Right.
So you're going to see a lot more people looking to get out. So again, I don't think 2025 is a great year for all of real estate. In fact, I think 2025 is only great for real estate investors because we can be picky. We can
Right.
find the best deal. We can create the best deal. We can get seller financing. We could do novations. We could do whatever works to solve the seller's problem. 2025 is going to be for the investors. Now, for the investors like you who are looking to flip, you just got to buy better. If you were going to buy it at 285, buy it at 275, because I think on the opposite side, your hold times are going to go up. Instead of 35 days, it might be 65 days, which means at least one, if not two, extra mortgage payments. So if you just go into this buying a little bit better, 2025 is going to be amazing. Frankly, 2025 might be better than 24 and 23 because you're going to be able to cherry pick the best of the best deals.
That makes sense. Okay. All right. All right.
So
Go ahead.
Now let's go to interest rates.
Okay.
The market right now is pricing in 4 rate cuts. Larry Fink, I think he's the president of BlackRock, I believe. It might be Blackstone, but I think it's Blackstone, I guess. One of those, maybe BlackRock. He's out saying that the Fed is not only not going to cut 4 times, but the Fed might be forced to raise rates in 2025 because of tariffs in the economy, in inflation. So I don't think there's any certainty on rates going crazy lower in 25. I do think that happens in 26. I think 2026 is the year of lower rates. It's the time coming out of a recession. I think a recession in 2025 is very likely, right? I think Q2 is going to be a disaster. I think Q3 might not be much better. So I think 2025 is a tough year. You got to watch your P's and Q's. You got to watch your cash. You don't want to go bankrupt. But, after that, I think 26, 27, 28, 29 are pretty healthy years. And, the economy starts anew and we come out of a recession growing. So that's kind of how I see the U.S. economy, at 10,000 foot.
Okay. So just to be clear, you're projecting, or your opinion, obviously based on what you're seeing, 25 is still going to be an adjustment of a year. And you're saying that, yeah, even though we have 4 more rate, potential cuts, they may not cut. They may stay normal or they may increase, right? Because of tariffs. But do you truly believe that that you're going to see it increase? Because if it increases, I mean, obviously now it dropped 0.75, right?
Mm-hmm.
And then if it increases, it's going to get back to where it was. That's how I see it. But then at that point, then it drops another half point or a point, because I don't know. I mean, I'm kind of on the fence about what's really going to happen. I'm seeing, at least in our market in the high desert, not Orange County, but in the high desert, I'm also seeing like inventory getting bought up, and things are starting to move a little bit more, and more stuff pending.
Yeah, what you're seeing in the high desert is just more evidence that rates matter. Right.
Yes,
Last week.
In our spot. Yes.
Yeah. Rates matter. Right. Because again, you're very much entry level housing, first time home buyers, right? First time home buyers typically don't go to Orange County, right? That's another price point. It does happen, but not as often. So I think what you're seeing in the high desert last week and certainly this week with pendings is rates matter. People were getting half a point off. People were being able to buy into the 5s. I don't think that's the case, as we heard on Tuesday. It's certainly if they buy into the 5s, it's not as cheap as it was last week. So I think you're just seeing rates matter. Also, we're in the spring selling season, so there's some of that. Back to your interest rate question.
Okay.
I see 0% chance they cut 4 times. But to be fair, I see 0% chance they're going to raise, right? I made a call in December that there were going to be no rate cuts in 2025. I think that call is at risk. If you put a gun to my head and said, choose a number, I'd probably pick 2 today. I do see the economy weakening, but I also see the threat of inflation. I think stagflation is a real ugly possibility, but I think the job market might be weak enough come October, November, December that the Fed is forced to cut. I don't think they're going to cut in the summer. I think there's a lot of people that think May, right? There's a Fed meeting in May. I think there's a lot of people pricing in a May rate cut, and I can't see it. Others are pricing in a June rate cut. And I'm like, maybe, but is the job market going to really weaken that much by June? I don't think so. So I will admit that my call for 0 is looking a lot shakier than it did 2 months ago.
Okay.
But I think 4 or 5 rate cuts is pure hopium, in my opinion.
All right, can I be a hopium?
Yeah, of course you can. Of course you can.
No, and the reason being is just because, hey, like, it helps out with our, with our flips that we got going on. We can get an extra little chunk, little 10, 15, 20K.
Of course. Yeah.
And not to mention, the OC side of it, I'm looking at our specific area, and it's very, very niche, right? OC in general doesn't really follow the flow of interest.
Very different.
It does
very
not
different.
at all.
You got a lot of cash buyers in OC.
They're just like, I want it and I'm going to pay. I don't care. Here you go. It's really an interesting market. So
I agree.
It's cool. I'm seeing both sides of it right now. And I'm like, all right, I'm playing both sides. This is interesting.
Yeah. And again, I was just at Deal Champs. Shout out Jason, Dean, and Stratton for having me there. And I kind of delivered this message as the opening presentation that 2025, the only winner is going to be the real estate investors. But like you, there were plenty of flippers in the audience. And I tried to make it painfully clear that even though 2025 is the year of the investor, if you're not careful, you can go bankrupt, right? Because if you overextend yourself, you build up too much inventory, you have too much mortgage payments or hard money or whatever it is. And, your hold period goes from 30 to 90 days. That could be a problem if you overextend yourself. So what I try to get flippers and buddies like you to understand is you got to buy a little better. You got to buy with a plan to hold 2 extra months. And as long as you build that in and you buy right, you should be fine.
Mm-hmm.
That's my advice.
And that's something that, holy cow, like it's a big play. I mean, you're right, 2-3 months extra. I'm looking at our board, like
that's what I would plan for.
We got some pain happening, but we got some good stuff happening too, closing a few. And
well, that's the beauty of 2025. Again, I think if you're a excellent real estate investor, which you are, and you heed my warning of buying just a little bit better, you're going to have an amazing year. I'm afraid that too many people are like, hey, this is the number. It's 285. That's what I would have paid last year. I'm going to pay 285 this year. But you don't realize your hold period is 2 extra mortgage payments.
Yeah. Drop it now, get it over with and be done.
Yeah. You got to just buy a little bit better.
Yes.
Yeah. So that's my advice. I think 2025 is going to be a great year for investors that do the work.
All right. Well, let's, you heard it, guys. Michael says, do the work. He's wearing the hat.
Yes.
Do the work and become disciplined daily. Okay.
There you go. Omar, where can they find you?
Guys, follow me on IG. I'm at Invest with Omar, and a bunch of stuff's happening. Flips, cat houses, borrowing this, that. I mean, just giving you a lot of information for free. So that's that.
Appreciate it. Thanks, family.
Welcome.